Pay the taxes.
Yeah, and you got to know what you're doing because the laws, they change all the time.
Yeah, they do.
You need people that know the deal and give you some advice, not just tell you what happened, but start looking ahead to what's to come and interpret what happened this year and get you a plan for next year. And so it's time for us to turn to our good friend Kent Busek from Busek, Olson and Associates. We call him the tax man around here because he knows he's got a lot of great advice, got a lot of great answers. I've worked with Kent now for the last couple of years, and boy, he makes it so easy. Got a great staff over there, and they take great care of the Hallstroms. They'll take great care of you as well. And we asked Kent to come by and talk about a few things. Hey, Kent, what's going on, man?
Good, Steve. Thank you for the kind words this morning.
Well, yeah. Well, they're absolutely earned for sure. And we've gotten some very nice refunds the last couple of years. We cannot promise that will be the case for everybody, but it's happened for us, and very thankful for all the work that you and your team do. So this time of year, what kind of calls are you getting right now, Kent?
The one call that we get is, what's changed from previous years, what things should I be considering, and like we've talked about in the past, what I would like to do is get the calls back in November, December, October. So doing the planning after the fact or after the end of the tax year, it's like, what can I do?
Yeah.
And where we have discussions about health savings account, which is an underutilized tool that's out there for everybody. If you don't have one through your employer, you can set one up yourself. IRAs, for example, there's that opportunity as well. We can look at, did you take proper depreciation if you did buy a piece of business equipment? So it's a little bit harder after the fact. It's more just putting everything together right now. But what's changed? But and I did want to point out a thing that did change here in the past month or so. There was some retroactive tax changes back to 2018, because when the president passed his tax act at the end of 2017, some things weren't extended. So, for example, private mortgage insurance. So if you have PMI on your mortgage, it wasn't allowed as a deduction in 2018. You now can go back and amend if that's something that you're paying and you itemized.
Okay.
So you could go back for 2018 for that, and going forward, it's available. The other item, which is becoming more and more popular, is they made retroactive the electric car charger. Or the electric charger tax credit, so up to $1,000. So, for example, if you're somebody that bought a Tesla in 2018 and then bought the charger for your garage or your home, there's $1,000 tax credit for that you could go back for in 2018.
Okay.
That's on the personal side. There are a few business credits that were made retroactive 2018, so I have some clients amending tax returns for that on the energy credit side.
Okay.
So there was a litany of changes that have just gone down in the past month or so that impacts 2018.
There's a lot to keep up with. Wow.
Well, that's why you call Kent.
No kidding.
There is, but then going forward, there are some exciting things on the retirement side. It used to be that at 70 and a half, or the former rules were at 70 and a half, you had to start taking your required minimum distribution out of your IRAs or rolled over pension plans. They've now changed that till 72. So if you haven't started taking your IRA if you're 70 today, you don't have to. You can wait an additional 18 months before you start taking that money out. And then lastly, the other thing that's changed is you can, at age 70 and a half and beyond, you can contribute to an IRA, which you couldn't do before.
Okay.
So if you're still working, if you have earned income, you can still put money away for your retirement after the age of
I like it.
70.
Very good stuff.
So when you do ask the question, what should I be looking out for? There actually, when you stop and think about it, and everything I just rattled off right there has been a lot of changes here in the last few months. So.
Yeah, and we didn't hear a lot during the year about look for these big changes, but there's always something.
Well, they just actually happened in December. They passed a budget resolution, so it's new changes. So.
When can you deduct expenses related to trade or business? When are those things allowable things that you can do?
A lot of questions on that. Thank you for asking. In pre-2018, if you were an employee and had unreimbursed expenses and you had enough of them, so if you were on the road and you paid your meals yourself, your hotels yourself, mileage, and you weren't reimbursed by your employer, you could deduct those personally. So as an employee, those are no longer deductible. That's the major change. If you are a sole proprietor, a contract employee, a subcontractor, or have your own business, the rules stay the same. So people will ask me, well, I can't deduct my mileage anymore and I have my own business. Well, no, that's not the case. If you're the employer or independent contractor, the deduction policy hasn't changed. It's just for employees.
Mm-hmm. Okay. So people traveling with a personal vehicle, not deductible now.
That's correct.
Okay. All right. How about for like medical expenses? There was if you had medical expenses, you didn't have insurance or something like that, and you had all these unreimbursed medical expenses. Are those still something on the books?
Yes, and there's an itemized deduction again. And
Sure.
It's subject to 7.5% of your adjusted gross income, which means there's a phase out. Mm-hmm. So the first 7.5% of the computation, if you make $100,000, the first $7,500 of medical expenses are not deductible. But then you have to itemize as well. And if you remember in 2018, the standard deduction doubled. So a lot of people aren't itemized anymore. So it is tougher to utilize those medical expenses.
Can you deduct chiropractic under medical, or is that not qualified?
It just depends on the facts and circumstances.
On what it
so
is.
like, let's say, for example, a doctor refers you to a chiropractor saying that you need it and it's necessary. But again, you have to reach all the thresholds that chiropractic needs to be more than 7.5% of your adjused income, and you have to be itemizing. So it's a tough threshold to reach.
So you hear every once in a while, Kent, about opportunity zones and tax deferrals on that. Is there anything we need to know about for our taxes in there?
I think you do, and this has actually become a real popular item. And again, I'm glad you brought that up, because right now going on with the city of Fargo, they've brought in a group of federal authorities, agencies, and they're meeting yesterday and today with the city of Fargo about their opportunity zones and how the federal agencies, HUD, FHA, EPA, Small Business Association, have representatives from national representatives in town, and it's being put on by the city right now, discussing federal programs and utilizing opportunity zones. So in essence, what the opportunity zone is, a person can invest with capital gains. So let's say they had Microsoft stock, for example, and they sold their stock and had $100,000 of gain. You can invest in an opportunity zone project or an opportunity zone fund, and you don't have to pay taxes on those dollars. So if you look at downtown Fargo, for example, a lot of activity going on with Epic Companies, with the Kilbourne Group, Enclaves. They've got projects going on in downtown Fargo. They have opportunity zones now. So if you want to invest with those groups today, you get a tax deferral for 7 years, 6 years now. But then there's also some exclusions, and long-term appreciation is excluded as well. So a lot more talk about that, because a lot more people could roll into real estate with capital gains. It used to be mostly people that had real estate gains would buy new real estate. Well, this opens it up. You sell your business, you sell equipment from inside your business, you sell stock. You can now invest in these projects tax-free.
Yes. What I love about working with Kent is if you come up with this weird idea and you call him, he'll tell you if it'll fly or not. And sometimes I get these goofy ideas in my head about, well, maybe we should. Oh,
You
I know. It's hard to believe. Yeah.
I'm shocked.
Yeah.
Wow.
But he'll sort it out. He'll tell me if I'm on something or if I'm on to something, because there's a difference, Alex, between the two.
Yeah.
Yeah. So
Believe me.
Ideas like, trying to structure compensation. Do you do more with distributions and salary, personal level? Maybe pay, some of your charity things a day early or a day late and stack it all together. That's something you and I have talked about quite a bit, is with charitable contributions and things like that you'd normally do. Maybe 1 year you take the standard deduction and then you defer some payments for a day or two, pay them in the next year, and then that next year you gang up on all your deductions and take the itemized deductions. So there's a lot of different ways to skin that cat.
And it just goes back to what we call as planning. And that, like I said, starts in September, October, November. You sit down and you meet with people, because then that gives you time as the taxpayer to decide. So if you want to double up on charitable contributions 1 year, if you want to double up on real estate taxes in that same year, it gives you the opportunity to generate the funds so you can do that personally. Vice versa, if your business, for example, needs to buy new equipment, should we buy it today? Should we wait after the year? And, I was thinking about this as I was walking in here, and, how this is just a beautiful radio studio right now. And I always think of WKRP and how radio stations used to be in the basement and grungy and with the vinyl records.
That's what
on the
our
back.
old one you look like.
And so anyways, and you just come in here and this is just amazing. So again, but you as a business owner have to think about, should we buy more things to make this a better, more profitable business on our side?
Well,
So-
we got to keep Alex happy.
Yeah, we
That's
do.
really the story.
That is the main deal.
If we do that, everything else. Kevin's a little more laid back, but Alex has got some demands.
High
That's-
maintenance.
Yeah.
Well,
Mama's got to be happy.
right.
That's exactly right. Yes. Kent, really good stuff as always. If people want to find out more about you, have a conversation with you about some questions they have or helping them out, how do they do that?
They can call our office 356-7867. That's area code 701-356-7867. Support staff will get you on the schedule and meet with myself or
Yep.
Brent or Steve. We've got a crew of this time of year. I think we have 5 CPAs on staff.
Nice.
And about 9 tax preparers. So, we have a lot of capacity as well, and always looking for new opportunities like everybody else.
Well, like I've been saying before, what Kent gives you for added value is that he's a guy who's running a business himself. So he's kind of going through all these things that if you're a business owner, an executive, and you're trying to figure out this, he's probably been wrestling with the same kind of stuff too. So whether it's individual questions, things from a business perspective, he can give you that top to bottom, and he can advise you on the business side as well as advise you on your individual stuff. So you kill 2 birds with 1 stone. That's how they do it over there at Taxman. Give us that phone number one more time, would you, sir?
701-356-7867.
Okay, there you go. Kent, good to see you as always. Thanks for coming in.
All right, thanks, Dave.
Kent
Thanks, Alex.
Busek from Busek, Olson & Associates.